Hi, I'm Jeff Clark, Senior Lender with Live Oak Bank's Craft Beverage Group. We specialize in lending money to distilleries, wineries, and breweries. Banks are basically looking for three things. Now, there's a lot of granularity on this, but these are the three largest ones. First and foremost, the most important is character. Um, and we measure character by good FICO scores, your credit scores, by a clean civil and criminal background check. The second thing we look for is industry experience. Do you know what you're doing? What's your background? Why should we think you're going to be successful? And then the third thing we look at is that cash flow we discussed. And that's crucial. Why? Because it's cash flow that repays your loan. A lot of people don't grasp that because they haven't had a reason to or haven't taken any accounting courses or banking courses, and why would they? But those are the three things we're looking for. Now, as far as cash flow in this environment, what we're looking for now is historic cash flow. We're going to look at 2019, and we're going to look at year-to-date 2020, September 30th, as of this moment in time. And what we want to see is you cash flowing at 1.1 to 1.25 times historically. Then we're going to look at your projections and everything else that goes with that, your balance sheet, your leverage, your working capital, your cash position. Who do you sell to? How do you sell to them? Are there concentrations? So even though there's just really three things we're looking at, there's a lot of granularity that falls in underneath those. But we're gonna want to see positive cash flow that we believe will be sustainable and allow, because the worst thing we can do as a bank is to make a bad loan. If I loan you money you cannot repay me with, I've destroyed your credit. I've probably done terrible things to your family life, and we don't want to do that. We want to give you money that helps you grow and helps you become financially stronger and not back you into a corner. So let me start by saying, we discussed the granularity of what we look at. So let's just go through a couple topics here and explain the why. Why do you look at this? So sufficient working capital. What's working capital? That's your cash. That's your accounts receivable. And what we want to make sure is you've got enough working capital to pay for your operational expenses. Because if you don't have any working capital, you're in trouble. We like to see this ratio called working capital ratio, where we take your short-term assets and your short-term liabilities. And we want to see at least $1 in short-term assets, your cash and your accounts receivable and your inventory, to every dollar in your short-term liabilities, which would be accounts payable, your overhead, things of that nature. So it's important that you have sufficient working capital. Otherwise, you're probably not long for this world. Another thing we look at is leverage. Leverage is what's the ratio of debt to assets. Most banks do not want to see more than 2 to 1. They want to see $2 in assets for every dollar in liability. That's your long-term and short-term assets, long-term and short-term liabilities. Now, why is that? Well, we see it on a personal level, we see it on a business level. If you have too much debt and you're over leveraged, you have very small margin for error. And so that is a nice thing about an SBA or USDA loan, is they will allow for higher leverage. But we always have to be careful about that. Once again, we want to make you a loan that helps you grow and not get you in trouble. Gross margins and net margins. So many people don't understand what those are. Your gross margin is after you take your cost of goods sold from your revenue. That's your gross margin. We look at that percentage. Is that growing? And if it is, why is it growing? Because you're raising prices, or you're lowering expenses, or preferably both. Net margins is your net profit or loss. But I talk to a lot of people, and they don't really grasp what that is, and it's important. Industry experience of the management team is just crucial. In the spirits industry, I see somebody that comes to me from one of the major spirit houses, that gives you comfort. Now, what were they doing? Were they in operations and now they're in charge of sales? What are your qualifications to be in charge of sales? Or vice versa. You're a sales guy, but you're going to run the distillery. I need to understand how that's going to work. So we like to see people with industry experience and quite frankly, have been through a couple of downturns. And if you've made mistakes, tell the banker, hey, I screwed up. I did this. I shouldn't have done that. But this is what I learned. That's what I'm looking for. Somebody that's not afraid to make a mistake and not afraid to admit they made a mistake and why they're not going to make that mistake again because they learned something from it. Guarantor strength. So on virtually any loan, but especially it's on all USDA and SBA loans, there are personal guarantees required. Now, what is a personal guarantee? So SBA and USDA says that any owner, whether it be an individual or a business, has to provide, if you have a 20% equity or greater stake in the company, you must provide a personal guarantee. And what is that? A personal guarantee is saying, I personally guarantee this loan to my distillery. And if there's if the distillery fails and we cannot be made whole, then the lender will come after my personal assets. Now that gives a lot of people indigestion, and I can understand why, but if you're not willing to guarantee your business, why should I be willing to loan money to it? And if you have a weak business model and a weak guarantor, there's a good chance we're not going to be able to help you. But when you step up and say, hey, I'm more than happy to do that. And, here's the collateral. You can have the equity in my house. You can put a deed on that to lock that in so I don't go use it up. But a lot of people don't understand that. And I try to get that up front right out the gate with the borrower, because that's where the indigestion's at. Does it give you pause? Of course it does, and as well it should. But that's something that's going to be required. Can you get a loan without a personal guarantee? Yeah, but you have to usually be really large, really profitable. And that's not the majority of the industry. I mean, as far as the numbers, you've got there's a few really large players, and then there's the world that we work in, the craft producers. Consumer reviews. We take these with a grain of salt, but when I'm looking at a prospect, I start digging on the internet. I look at Yelp and TripAdvisor and things of that nature. Also understanding as you dig into it, sometimes people will, it may not represent the true experience there, but those are important things. We had a situation where my coworker's talking to the owner of a business, and he's going, you got these really low Yelp reviews. And all of a sudden you hear speakerphone, you hear another voice going, no, we don't. He's like, yeah, you do. And so he copied and pasted and emailed it to the owner and the tasting room manager, who was the other person in the room. So consumer reviews are important. They're not end all be all, but we're looking at the big picture. We're just trying to make sure we understand it. If we just see glowing reviews, oh, I can't wait to go back, and here's a picture of me and my puppy, and that's a good thing, especially now with the shelter in place. 3 years of monthly income statement and balance sheet projections. And you're going, Jeff, why do I need that? Well, you should know your business better than anybody else, and you should be able to project. Now, right now, it's really tough. Nobody knows where things are going. We will get through this, but to do projections now is challenging. But the good news is there's resources available to you to help you with that. So, for example, the small business development centers, they're all across the United States. They're subsidized by the SBA. And they employ former bankers and CFOs to come in and help you put together your business plan and your projections. USDA and the SBA both require 3 years. So don't feel like you have to go out and reinvent the wheel. They're going to gather your historic financial information. They're going to go apply industry metrics to that and help you come up with a cohesive business plan and projections that you should be measuring yourself against, because we do. So let's say I did a loan 3 years ago, and you come to me and it's like, Jeff, I want to borrow some more money. And then we're going to look at your projections you originally gave us and say, how did you track to that? And if you didn't track to that, I need to know why you didn't track to that. Now, and then the other thing too, it gives you leverage because you come back and say, hey, Jeff, I'm just blowing it out of the water, man. I'm just killing it. Then, hey, here's my projections. I'm up here. Here's why I'm up here. And that's really important, the why. We need to understand the why. Was it hand sanitizer sales? I can't count that because that's going to be non-reoccurring. It's not going to be sustainable. We're assuming we're going to get out of this and hand sanitizer sales will go away. Was it due to a non-reoccurring one-time event, a sale of an asset or something like that? Well, that unless you're going to continue to sell assets, I can't use that. So I have to take that out of your cash flow calculation. And something that we're requiring now is a COVID recovery plan. We have a questionnaire that we send you. And once again, we're just trying to understand why. What happened with COVID? Did you get a PPP loan? Did you get an EIDL loan? Did you lay anybody off? Did you bring anybody back? Is your PPP loan going to be forgiven? What are you doing now with the regulations in your town or state as far as if you have on-premise? So that's, I guess the best advice I can give to anybody is really be prepared. Just know your business better than me, because if I know it better than you, then it's not a good thing. Well, I want to thank Emily and Park Street University for giving me this opportunity to speak to everybody. I hope you found something of value here. These are challenging times. Don't feel like you're alone and don't feel like you have to go it alone. We're available to help in any way we can, even if it's just to review your financials with you and give you ideas of what might be available. You can find me on the liveoakbank.com website under the wine and craft beverage tab or link. Or you can, there's a lot of ways to get a hold of me. I'm on LinkedIn, but yeah, reach out. I'll do whatever I can to help. And we, again, appreciate the chance to talk to you.